Guys, welcome to Crypto Insight. I've been a professional options trader for 20 years, and about a year ago, I switched my focus from equity options to crypto options. Why? Because of the huge volatility and opportunity in the space. Trading Bitcoin has allowed me to multiply my capital in a safe way. And in these videos, I will give you the benefit of my experience and insight into how I'm reading the crypto vol market and using options to either hedge or speculate on future expected moves in the crypto space. Don't forget to subscribe and like the video, and I hope you find this content useful. Thanks. What a crazy week in Bitcoin. We had said last week that volatility had exploded, implied volatility had exploded, and there'd been some liquidations going on, and we'd had a move down, to quite key levels around that 40,038 area, basically. Okay, and that was the level that the market was looking to hold. Okay, and last week on Wednesday we broke that level in dramatic fashion. Okay. So the crypto crash, what's been driving it? Obviously, it all started off with the Elon tweets and talking about Tesla bailing on Bitcoin because of environmental factors. Then we had China cracking down and saying, that they weren't going to they were going to put up some sort of restrictions or ban the use of sort of the digital tokens, things like that. And then you had the US Treasury weigh in and then talk about how the IRS is going to want to see every transaction in Bitcoin above a value of 10 grand and things like that. There was a lot of kind of simultaneous bad narrative coming out around Bitcoin at the same time. And we were reaching quite key supports around that 38 to 40,000 area. Okay. We took that out. But the truth is those headlines were just triggers, right? But clearly, after we've seen what's happened, there was clearly too much leverage in that system, right? A lot of people piling in, using excess leverage, needing to be washed out. So those weaker hands that were late to the party in crypto and in ETH and Bitcoin have been washed out to an extent. Okay, but where are we now? Right now, the line in the sand seems to be 29,000, right? That for me, that seems to be the level. The 28 to 30K area is the level that has to hold to keep this bull market alive for now. I'm not saying I'm not saying if that breaks, the bull market's definitely over. I'm just saying if that breaks, don't be surprised to see a further wave of liquidations, because a lot of people are going to be hanging their hat onto that level and using that level as kind of a stop zone, basically, right? So something to be aware of. Now, in terms of the technicals, yeah, I mean, if that breaks, then technicals are looking really ugly. But right now, the technicals aren't looking too bad because we've reached these major sort of areas of support, and we've exhibited some bullish divergence on the momentum indicator, right? So that's what I often look for to see when to get back into a market post correction. And we've had this sort of three-wave ABC type correction, with the C being the most violent, which is what Elliott Wave would kind of have you. That's what you're looking for in Elliott Wave. You're looking for an ABC correction. You're looking for the C wave to be the worst, the most violent. Certainly seen that. So, the kind of the boxes are checked for this to be a textbook Elliott Wave type correction in a bull market, right? So that's one argument. But like I say, if we take out 29, 28 area in style over the coming weeks, then that picture starts to be seriously in question. Okay. In terms of ETH, obviously, ETH had a spectacular run, but the crash was just as spectacular, right? I had some levels that just got absolutely annihilated. I think 3250 was a big level for me, and that one candle just destroyed it, and we touched below 2000 within a day. I mean, the ETH sell-off was unbelievable, right? Levels that I think to watch out for now in ETH are going to be around the 1700 area and maybe the 1550 area at a push. But if we can get below those levels, then I mean, ETH is looking pretty terrible, right? But it has had a very strong bounce off the lows. I mean, at the weekend, we reached lows of close to 1,700, and we reached highs yesterday of, above 27. I mean, it's insane, right? So we're having like 50% bounces off the lows, right, within 24 hours. I mean, this volatility is just wild, right? If we look at the spread between ETH and Bitcoin, that had reached astronomical levels at 0.08, had a decent pullback, but still, that uptrend in that spread seems to be intact, right? I mean, you could still consider that a corrective move in that spread that we've bounced off pretty strongly, right? So, and the narrative in ETH is quite a bit stronger, I think. The entire DeFi world is being built on ETH. You've got the ETH update coming out in July. You don't have the environmental issues that Bitcoin is kind of being pitched to have. So you've got the story in ETH relatively intact, but just right now, you've just got a crazy amount of volatility in it, right? So you need to be careful about how you size positions. But if you're buying the dip in crypto, you're probably better off buying the dip in ETH than you are buying the dip in Bitcoin, I suspect. Yeah. You'll probably, convince yourself that it's got less risk, maybe, right? Now, in terms of the narrative and where, the pros and cons and things like that, I saw some great quotes from Eric Peters, right, from One River Asset Management that I just thought I kind of wanted to read because I think they're quite interesting and they're quite poignant, right? So in human history, he said, in human history, no single asset has come under such coordinated assault by the very global institutions that perpetually inflate asset prices in the name of securing prosperity, right? And yet through it all, digital asset trading just carried on, right? It obliterated the leverage longs and it wiped out the weak. For the first time in decades, we saw the ferocious beauty of a truly free market operating at scale, right? Efficiently and ruthlessly, right? These assets inhabit a world without a buyer of last resort, like the Fed, to bail out its bankers. It was a remarkable display of anti-fragility, right? I think that's a great quote because it's true, right? You don't have the Fed as a buyer of last resort. These markets are just behaving the way markets were supposed to behave, right? Fear and greed, it's all there to be seen. It's all on display. And the market just finds the natural price after washing out the weak, washing out the buyers and the sellers, and it finds its equilibrium by itself. It doesn't need intervention to step in, right? And he also said, it is this independence and resilience that underpins the long-term attractiveness of digital assets. But like all powerful new technologies, their promise is poorly understood by most pundits. And amongst the many benefits that such technologies will produce, one of the more ironic is that despite today's outcry, they have already begun to spur and finance an accelerating global transition to renewable energy, right? So as people are attacking Bitcoin for being so energy intensive, he's saying that it's driving, that acceleration towards that transition, right? So that's obviously, he's a bull on crypto. I think his fund runs a load of crypto. So, he's going to look at it from a positive standpoint. But I just found some of those remarks quite interesting. Now, on the other hand, the only way this can be an unbiased assessment is if we look at the other side, right? So on the other hand, many believe that the bubble has popped in crypto, and we're now going to go into a 2018 style bear market, right? And a well-known Bitcoin bear, Roubini, recently said, Bitcoin and cryptocurrencies aren't assets. They have no income or utility, right? So there's no way to arrive at a fundamental value, right? Bubbles occur when price is way above the fundamental value, but we can't even determine that for Bitcoin, right? And he's saying if you can't even determine the fair value, of course it's a bubble. That's what he's saying, okay? And he also mentioned that there's less than 0.5% of all the Bitcoin addresses own around 85% of all Bitcoin, right? Which makes manipulation in prices much easier because they control so much of the volume, okay? If they want to move, that's going to have massive impacts, right? So I don't know about that because looking at some of the on-chain data that you get, apparently the big holders with loads of Bitcoin, they were buying, not selling in the latest capitulation, right? So I don't know if that's necessarily such a bearish thing for Bitcoin, right? The fact that they've got these whales that own so much of it seems like they just don't touch it and they want to own it forever, right? And so they're going nowhere until they think it's reached true price discovery. And at the moment, that's nowhere near. People who are long-term holders of Bitcoin don't think we are anywhere near the kind of end game in terms of where the price needs to go at the end of this bull cycle, right? So yeah, I'm not sure that the whales are going to come in and start like pummeling the price, to be honest. And that's not the evidence that we're seeing from some on-chain data. Okay. Personally, so those were the for and against kind of arguments, right? Personally, I got into the space because I'll tell you why I got into the space, right? I got into the space because I felt there was some value in having some exposure, maybe less than 5%, maybe up to 5% of your investment assets maximum, to this fledgling alternative asset class, okay, that offered some hope of independence from global fiat monetary system, right? From a global fiat monetary system that was becoming more and more difficult to trust, okay? Trillions of dollars and other paper currencies were being printed at a record pace in the name of helping people and small businesses to recover from the pandemic. And yet the main beneficiaries, from what I could see, appeared to be large corporations and their shareholders, okay? To me, that just didn't feel right, yeah? So that's why I started to allocate a bit into Bitcoin, right? And crypto. However, when you invest into such a young and volatile asset class, you need to be acutely aware of the risks and hence size your positions accordingly, okay? That is why professional investors who have been in this space for a while were not the ones panicking last week, because they knew how to size their book. They weren't needing to panic. They had sized it appropriately to their assets. And if anything, some of them might have even added because they were maybe not as big as they wanted to be, okay? So that's kind of how I approach it, right? I agree that it's near impossible to establish any fundamental value for Bitcoin, okay? But then again, you know, if you look at the failure of most analysts to work out the fundamental value of stocks like Amazon and Tesla over the years, which traded on PEs of 100 or even the thousands, I'm not sure that fundamental value means much these days, right? When your denominator, which is the fiat currency, the dollar, for example, when that can be debased at the rate that it's been debased in the last 12 months, what does fundamental value even mean, right? That's kind of how I'm starting to think about it, okay? So, you know, this was an interesting sort of graphic from Goldman's that basically showed, let me share this, you know, which path are we going to take? Today's Bitcoin prices reflect some probability that cryptos could achieve greater adoption in the future, okay? If you get greater adoption or successful adoption, then that dotted line says where we are now, and we're on the S curve and we've got a shit ton of adoption still coming, okay? And God knows where we end up, Bitcoin at 1 million or something stupid. But the red path, failed adoption, means we've probably still got some more adoption to come, but we're going to reach a peak and then it's all going to peter out, right? I don't know. Impossible to know. Either path is possible. For me, time will tell. But, you know, I'm not bailing out on all my crypto. I'm just making sure I'm comfortable with my size. And if I'm a bit nervous in the short term, I'm using options to hedge it. Right, and on that point, let's have a little look at what the options market is saying on crypto. Yeah. So if we go to my trusty page for vol analytics on crypto. So what are the main things? So you know, you could look at sort of 1 month vol, what that's been doing. And obviously 1 month vol last week, we were saying had a bit of a spike to around 120, which already looked a bit expensive. It then spiked even higher, and at the weekend it hit highs of about 150. So June volatility reached highs of about 150, and now it's collapsed since the bounce yesterday. It kind of touched back to around 105 and is settling at about 110. So, you know, whereas before Bitcoin vol was kind of used to settle around the 75, 80 area, we've ratcheted up. We've doubled from 75 to 150, and now we're kind of mean reverting back towards 100. I think you'll need a bit more stabilization. Like, I mean, we're having such crazy intraday swings, right? If you can get, you can manage to be, I don't know, between 36 and 44 for a week, then this vol's got room to get slammed some more, basically, right? But that remains to be seen, right? We may well still have some more work to do, and Bitcoin may even break that 29. If it breaks that 29 area, then all bets are off, right? This vol could go anywhere. Yeah. So that's kind of what the 1 month implieds have done and what they look like, right? If you want to see how that looks in terms of term structure, this kind of shows you the purple line is kind of where we were a couple of days ago. Front end, I mean, we were even higher at the weekend, but I just don't have that curve on there. But we started to get hit. You can see the curve is flattening back to this green line right now, but it's still in backwardation because the market is still in a stressed out state. If you look at skew, obviously skew has been flipping towards puts, which was, you know, not what Bitcoin had been doing months ago, but people have started to get nervous as we started to kind of run out momentum and break 50,000. So the short dated puts had already started to go up, but now the entire curve, right? So even if you look at 90-day skew is trading puts over, right? You look at 180-day, that's also trading around flat. So for 6 month optionality, puts and calls, 25 delta, trade at the same vol. And then for 1 year maturity, slightly still for calls, basically, right? So saying on a really long-term view, we're still going to pay a bit of a premium for calls. But for anything kind of 6 months or shorter, the skew, well, certainly 3 months or shorter is all for puts, because people are scared that this sort of consolidation may have legs still. But you know, in that kind of 6 month bucket, it's more neutral. So that's kind of what the skew is looking like and what the skew's saying. Now, you know, that may well be an indication that things have gone a bit too far, right? Often, and I come from traditional markets, right? Often in the equity market, when you see volatility and skew absolutely explode and reach like insanely high levels, that is often a counter indicator that a bounce is coming, because everyone is fully hedged up. Everyone's got so panicked on the downside that they've paid up astronomical prices for puts. And now, you know, we don't need to sell off anymore, basically, right? So that's kind of, that's often what we see in traditional markets, and in terms of the vol and the skew dynamics within those markets. We'll see if that's how it plays out in crypto, but certainly early indications after yesterday's bounce are that was a bit of a contra indicator, right? That was a bit of a reverse signal that things were getting a bit overly panicky. Yeah. Okay, so that's skew. We talked about term structure. We talked about the vol. You know, I had been obviously saying sell the June straddle last week before the puke happened, right? So I sold the 48,000 straddle at around $14,000. Clearly, that wasn't looking too great a trade down at 30,000. Thankfully, I managed to kind of not do anything, because I also had some risk reversals in the book, which were kind of giving me some level of protection. So I didn't panic. But once we bounced last week to around 40,000, I took that as an opportunity to protect my downside tail, right? So I then bought for about $2,000. I bought the 32,000 puts in June as well. So it allowed me to stay short that straddle, because I still think that vol's ultimately going to go back down. But I know that the scenario that's going to kill me and where that vol might not go back down is if we puke and break 30,000 and beyond. So I've covered my risk by buying those 32 puts to protect it. So I've got a straddle short versus long 32 puts. On the upside, I'm not protected because I'm not overly scared on the rally. So I think on the way up to 48,000, if we go there, vol's going to get obliterated. So I'm comfortable there. The thing that I wasn't comfortable with was the downside risk. Now that I saw prices couldn't stay above 38,000. And so I've managed to mitigate that risk. So I'm still in that trade, but I'm running it with a bit of risk management around it, basically, by buying that tail back. Yeah. And thankfully that tail didn't cost me the earth to buy either, right? So that was good. And then Ethereum vol, I mean, it's just gone even more nuts than Bitcoin, right? I mean, I think the front end was at 250 implied vol at one point in Ethereum. It has come down a lot. If we look at the June, it's come from about what, 180, or even, is that right? 180 back down to 140. So at a 40 vol retracement. I mean, Ethereum has been moving more than Bitcoin, so it shouldn't be a surprise that we're still trading 30, 40 vols over, which is where we are. In terms of skews, I do think skews probably still for calls in terms of the longer dated maturities. We bring it up. Shorter dated is firmly for puts. But if we bring up the 90-day, where's that? That's for puts. 180-day is for calls, 5 vols over. And the 1 year is definitely going to be for calls, probably closer to 5 to 10 vols over. So I think Ethereum call skew is kind of holding a little bit more than Bitcoin call skew, because people think that Ethereum narrative and that upside that Ethereum has is still there. An interesting thing as well is before the vol spike, you know, you had a bit of a kink in the curve with regards to, if we go a month ago, you had a bit of a hump in the curve term structure around the update. So if you looked at July vol and September vol, that was kind of where, you know, people were pricing there's going to be some excess volatility. Obviously that kink has been completely taken out because Ethereum does 20% a day for fun right now. So that excess volatility of the update is irrelevant. So it's only if the curve collapses back down and things settle down, then we're going to have that curve hump come back again somewhere around July, September, for when that update is going to get released, basically, right? But Ethereum at the moment isn't showing anything like that. But if you wanted to play, you know, some sort of mean reversion or some sort of normalization trade in Ethereum, it would make sense to own July maybe and sell June to play the collapse in that term structure, knowing that July is probably going to hold some sort of bid because of the update at some point when vols go back to 100 or wherever they go to. Okay. And that's probably it in terms of, I don't want to, yeah, there's not too much more to really talk about in the vol space. I don't think, I mean, we've got the max pain. That's probably one thing maybe worth mentioning is we've got expiry at the end of this week, big expiry on May options. And if we go to the activity, that kind of shows you max pain, right? So remember, max pain works out the level at which most options are going to expire worthless. And that seems to be at around the 50,000 area, right? So there can be a tendency for markets to gravitate to an area of max pain. Now, the problem is, I think that's true when the market kind of doesn't have to do too much work to get there. But to get from here to 50,000 is a bit of a stretch, I think, given what's gone on and the destruction technically that's happened last week. So I would say that it's unlikely to pop its head back up towards 50,000 for expiry. So I wouldn't be a major, I wouldn't really pay too much attention to the max pain this month, right? Maybe it means that we might be a little bit better supported and we're not just going to collapse into expiry. But I don't think we're going to get back to 50,000. That's my personal opinion. Yeah.
Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. I'd also encourage you to sign up for a free trial to our live and interactive Macro Insight Zoom call. As part of our trading community, as well as the call, you'll also get access to our Telegram chat and our weekly market reports. To find out more, you can also connect with us on the socials. All the links are at our website, www.options-insight.com. Thanks.